Good morning, good morning. How's everybody doing this morning? Glad to have you guys with me, guys and gals, for another day of market analysis. Yes, indeed, we're going to be looking at gold, oil, the SPY, look at the markets and see what's going on, and see where things have progressed since our last live session, which was last week, if you guys remember. So how's our forecast been going so far? Not too bad. Not too shabby at all. If you guys been following our channel, if you've been subscribed to our channels and you've been subscribed to the notifications, then you would be getting all the latest videos and analysis that we've been doing, and you would be able to compare each and every session that we've done. And you know, the CFTC videos that we've been doing, I mean, I think they've nailed it pretty much dead on with how price is reacting right now, right? All from being able to understand what's happening in the markets. You know, you put enough time and energy into studying what the institutions are doing with markets, and it gives you an incredible talent to be able to forecast where price is going to go. It's quite amazing how that works, isn't it? Quite amazing. And so what have we been seeing with gold and oil, right? We've been talking about it for quite some time. We've been talking about gold and oil for some time now. So pretty incredible stuff. You know, if you take a look at gold, we see a big dip down. Okay, started yesterday, and then today we can see it continuing. And so, you know, pretty much broke out of that range that we have drawn on the chart. Okay, we had a range there on the 2-hour chart that we were watching. We are watching for it to break out of that range. And so it's made a significant move to the downside now. Okay. So it's not quite where we want it to be, but it's progressing. It's progressing there. Okay. Slowly but surely. Okay. So here's that range. We're watching for a break of that range. We had made mention that if it broke through this area here, then it would open up the floodgates for a move lower. Well, it didn't do that. And then the breaking to the downside. Now, why did it break to the downside? Well, because institutional supply is in play here. Okay. And not just that, but when looking at what is happening overall on the charts, price is supposed to move down, right? The institutions accumulated a massive long position from further down on the charts. And they've been taking profits on those long positions, and we pointed this out. Okay? Remember what we have here on our website. Okay? If you haven't yet checked it out, go to our blog. It's right there. All the information is there. Okay? You click on one of the blog posts, No Trends in the Currency Market, and you take a look at what's happening with gold, and you take a look at their positions, right? What we've seen is that they were very aggressive with their long positions back in February and March. What have they been doing ever since then? Taking massive profits on long positions, right? So why on God's green earth would anybody be accumulating a long position in gold? But that's exactly what's going on. If you take a look at the positions held by retail traders, they're mostly long right now. And why is that? because exactly what we've been talking about over the last several weeks is that, remember the big rally up here in gold, right? So typically when a war begins, everybody goes to buy gold because it typically goes up. And so this knowledge is used against retail traders because it was around there where the attack from Russia to the Ukraine began and was widely publicized all over the media. And so retail traders coming in, thinking they were doing the right thing, started buying gold, right? That was beginning of 2022. But as you can see, the banks were already massively long on gold. They already held a massive long position on gold. And so when you already hold a massive long position in gold, what are you going to do? You're going to add more to it, or are you going to take profits? Well, the only way you make money is by taking profits, and that's what they did. All right? But you can't take profits on a position that you can't close. So in order to close those positions, you need other people to come in and take them off of you. So interesting how, leading into the beginning of 2022, they were starting to really accumulate gold to a high amount. Okay, we had 313,000 here, January 25th. I believe it was February 24th, if I'm not mistaken. You notice how they were already massively long at that point. Okay, and what's been happening ever since? Declining, right? But yet the war is still on, isn't it? According to the newspapers, the war is still on. Isn't gold supposed to continue going higher with the war being on? So, I mean, it's understandable why retail traders would be convinced that this is the right way to trade. But unfortunately, the bankers use this type of information to lure people. So they lured them into getting long here. And then remember what they did down here? They lured them into getting short. And then what did we say? Because they lured them into getting short, they're going to reverse price to the upside. And that's exactly what they did. And then at the highs, they started getting in long, and now they're pushing price down. So it's unfortunate, but this is how the markets work. Okay. So we have our arrows pointing to the downside because we do suspect that price is going to go even further down from these levels. As price declines even more, retail traders are going to get even more into long positions because they're thinking, well, it's overextended. Price is overextended, okay? Because we had this range here, right? And so they got in long here, and they're like, oh, this is good. And they get in long here, okay, this should go like this, and then it doesn't. So when it drops down here, they think, oh, it's overextended. We'll just get into some more long positions. And so that's what you're going to see. Okay, if you take a look at the sentiment, you'll see it growing more and more to the long side. All right, so that's what's happening with gold. Still expect more downside, as you can see by our weekly chart. We do expect price to continue to the downside. It is testing the ascending weekly trend line right now, so it could take a little bit of time before it actually breaks through there. But I think once retail traders are fully committed to the long side, they'll really push this to the downside, okay? Because once retail traders start to close off their long positions, it's it's really going to fuel this momentum to the downside. All right, so let's take a look at oil. So we had this this box drawn out here on oil for quite some time. Okay, and the idea was that we expected for price to close below our alert line by the end of June. So that's the alert line. And as you can see, price did exactly that. Okay, not only that, but we also said that price was going to stay in this range for quite some time, which is exactly what took place. Most of 2022, price just stayed in this range here on the daily chart. Now, why is that? Well, we had speculated based on looking at the CFTC report data. And again, we can take a look at that. Bring it up here. All right, when we are taking a look at the data, we could see that the institutions, again, were aggressive with their long positions. And what's been happening ever since? Look at the numbers. The numbers don't lie, like they say. Declining, 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 all the way down. All right, so basically, all this consolidation here, the banks have been offloading long positions. Okay, they're offloading long positions. In preparation for what? Why would you be offloading long positions? In preparation to start adding them again? I mean, it's possible. It's not likely, but it's possible. Okay. So we were looking at the charts to determine what was likely going to happen after they completed closing off their long positions. So we drew this rectangle and figured that if they closed price below this line by the end of June, then it was highly likely that over time we would see a decline in oil. Okay. Now, there's many reasons why we would suspect that oil is going to go higher, especially if you look at the news in the media. It's very biased towards oil going up even higher. Okay. I was going through the news and so many articles. In fact, there was one just the other day right here. This one really gets me thinking. White House is quietly modeling for $200 oil. Now, is that true? Are they really modeling for oil to go up to $200? I'm not sure. Okay, they could be. I'm not sure. I'm not privy to that information. What I do know is that oil is trading at 107 right now. Okay, what I do know is that for most of 2022, the big banks have been closing off long positions. Okay, because they were aggressive. Now, they could have been more aggressive with their positions. They weren't totally aggressive. Okay, like we see them at 503,000. All-time maximum size is 866. That's aggressive, super aggressive. But they were still aggressive, considering. And all they've been doing is closing off those positions. So it makes me wonder, why are they closing off those positions? So it leads me to suspect that price is likely going to decline. Why? Because there's a lot of indicators on the chart that we are looking at that is telling us that it's likely going to be dropping, okay? We still need some time to pass. We don't know exactly if price is going to be dropping, but if I had to put the odds in a direction either to the upside or to the downside, I would say to the downside, and it's probably sitting at around 65 to 70% odds that a move to the downside is going to be what takes place. Okay. Now let's look at the SPY. The SPY is an interesting one. Okay, because we've been following this one for a while. We've already said that it's in a downtrend. We were saying it was in a downtrend when the media was telling you that it wasn't in a downtrend because it just dipped its toes into being in a downtrend. Well, it is in the downtrend. Okay. And we had forecasted this move to the upside here. You remember that? All the way up to the target. And so it reached that target and has gone a little bit higher. And so now it's just staying within a range here. All right. So what's next? Well, we've been watching this one closely. And we suspect that there is a decent chance that we're going to get a rally higher from this area. But for members, we pointed out something very specific that is happening on the IWM, the Russell, okay? Something very specific happened on the Russell that could put the rest of the markets in a downtrend, all right? Because one market typically leads the other markets. That's what we have found, all right? And when we look at the SPY, NASDAQ, Dow Jones, and the Russell seems to be the one that's leading right at this point. It was trailing, but what just recently happened over the last few weeks is putting it in the lead. So there's an argument to be had for a move higher, and there's an argument to be had for a move lower. So what we're going to do is we're just going to sit patiently, and we're going to watch to see what direction the banks start pushing price. And if they start pushing price to the downside, we have a list of stocks in weak sectors that have nothing but downside potential that we're going to be looking to take advantage of. And if price starts to increase, then we'll take advantage of short-term trades to the upside until supply comes into play, and then we'll be focusing on shorting. Okay? So getting back to this, I wanted to go over some of these headlines with you before I let you guys go. Plug, has anybody looked at this chart, Plug? I thought it looked pretty decent. Okay, we got a massive move that took place recently. Look at that. Okay, as high as $70, now it's down at 17. But it is contacting institutional demand right now. Okay, this is the reason why I'm pointing it out, is because after very significant moves to the upside like this, what tends to happen when price gets down to these areas where the moves began, we tend to get very strong moves to the upside off of it. So I'm watching that, okay? I'm watching that. I'm also watching this area of supply here on the weekly chart. Because I think if this area of supply can get taken out, we got a clear move from that $23 area up to about $30. So it's just a trade idea that I came across when looking at the news. All right. Now let's take a look at what else I have found. I just found this very interesting because this is something that I've constantly been seeing in the markets, which in the newspaper, which just baffles my mind. We keep hearing all these stories about inflation, and it's because of the cost of oil and because of the war and all this stuff. Yet you have these big corporations that are increasing their prices, okay, and making record profits. And when you read the article, it clearly says that they're making these record profits because of the increases in their prices. So it's like, are they increasing their prices just to cover their costs? Or are they increasing and taking advantage of all this fear that's being put in the media to increase their costs so that they can make record profits? Okay. General Mills Inc. said higher prices helped lift sales in the recently added quarter, even as the food maker sold fewer items across the board. Do you think companies like that? Selling fewer items but making record profits? Yeah, I think so. So I think they're just toying with the idea of having the media create a fear, and then they just manipulate their prices as they see fit to make their profits without people having any real understanding of what's taking place. That seems to be a current theme along all the major corporations, the oil companies, the food companies, and so forth. So White House is quietly modeling, so we already talked about this one in terms of oil. And so I think that's quite interesting. Economic officials are analyzing and modeling worst case scenarios like what the shock of gas prices hitting $200 per barrel may mean for the economy. Interesting how they just word that, huh? You think they're just, if they are modeling worst case scenarios, it's almost like, will they be able to accept that? Let's just see if they'll accept $200 per barrel. What would they do? Would they fight back or will they accept it? Like, is oil actually going to go there? Or, would they be pushing oil there? It's quite interesting. Coinbase has been providing historical geo-tracking information and tracing software to government agencies. This is a big problem, okay? Because I don't know about you, but do you remember how they sold cryptocurrency being safe, secure, anonymous, government won't be involved, it's decentralized, you can transact and you won't be tracked? Well, basically, they just took that all out, okay, of the equation. All right. If you read this article that I posted a link to, it's just phenomenal what's going on here. A contract involving the sales revealed that ICE now has access to a variety of forensic features provided through Coinbase Tracer, the company's internal intelligence tool. The tool allows people to trace transactions through the blockchain, very specifically to connect cryptocurrency addresses to real world entities. Okay? This wasn't supposed to be able to happen. All right? But it's happening. So all those promises that they made, now we find out that, the largest cryptocurrency exchange is providing this information to the government. And why do you think that is? Why do you think that is? Okay? Coinbase, Global, who owns them? Okay? ARK is a major investor, but look who else is in there. Morgan Stanley, Vanguard, you think that's a coincidence? BlackRock is accumulating shares down here. So what does that tell you? Okay? It tells you you can't trust any of the cryptocurrencies, okay? Because they could tell you whatever it is that they want to tell you with respect to cryptocurrencies. They can say, listen, it's safe, it's effective, it's secure. But if the major corporations that are helping to facilitate the transactions are owned by the same nefarious group of people that are pulling the strings in governments, then what do you think they're going to do? You think they're going to say, no, we're going to honor the promises that we made to the people. We're going to keep it totally secure. No, they're going to say we need to create tools because there's hackers out there and terrorists out there that want to use cryptocurrency to transact. So we need to create tools to allow law enforcement to be able to track these people down. Like it's always the same thing. It's always the same thing. So it's not something we can trust, is what I'm saying. Last but not least, I was taking a look at insider trading on Tesla. So we previously pointed out that at the end of May, Elon closed off about $7 billion in shares on Tesla. And ever since then, okay, insiders have been continuing to sell off their positions. Okay, so just make note of that, because when we take a look at Tesla and we look at the markets, we've already predicted that the markets are going to be dropping significantly. So, if you knew the markets are going to drop significantly when Tesla was $1,100, wouldn't you want to take profits? Yeah. Well, that's what Elon Musk was doing up here. Remember that? Elon Musk took profits here, and now Elon Musk is taking profits here. Why do you think he's taking profits on his shares? Now, people could say, oh, it's because he's going to free up some cash to buy Twitter. You can say whatever you want to say. But the bottom line is, he's taking profits, okay, at these highs. Yeah, if you knew that price of Tesla was going to drop down to about $400, would you not want to close off your positions at $1,100 and $700? So that's what's happening. From what I'm seeing, okay? Insiders are closing off positions in Tesla, and there's nothing but downside from what I'm seeing on this chart, okay? There has been no longer-term upward structures being formed on this chart, so I'm not seeing any reason why price would continue moving upwards, okay? So that is it. So I'll leave you with that today. Any comments? Let's see. Looking for the continuation of US CAD as per your last video on COT reports. And my technical analysis possible. Looking for continuation of US CAD. In which direction are you looking for it? Upwards, downwards? I'm learning data trades from you. That's good. I'm glad. There's a lot to learn. We learn every day. All right. So I'll leave you at that. And thanks for joining me today. I greatly appreciate it. Be good. Happy Canada Day to all my fellow Canadians. It's a long weekend here. So I hope you enjoy your weekend. And thanks for joining me again. And we'll talk to you guys soon. All right. Take care, everybody.